started. And so I'll start with introducing myself, Eric Rosberg with U Mortgage, and I have Tyson here, Tyson from Lenshore, and we're talking about some pretty cool, unique ways that not only sellers but listing agents. Um, we don't want to inundate you guys with product knowledge, but this is a cool solution because sales is serving people with solutions, right? So Tyson, go ahead, introduce yourself, and we'll hop into the bridge loan.
Absolutely, my friend. So like you said, I'm Tyson. I work with Lenshore Mortgage. We are a partner nationwide for U Mortgage. Eric's one of my great partners. And we more or less kind of talked about how we could help service and help his agents. It's something that he kind of came up with to realistically give you guys the power and the capacity to understand where we're coming from, to service a wider breadth of clients. The more you can understand, obviously, like you said, we don't want to inundate with product knowledge, but the more broad your understanding of what this is, the more powerful your pitch and your approach can be to potential clients.
Right. And I think this is a unique differentiator. So for the listing agents, for the listing agent, you have just that extra tool in your toolbox when you're doing your listing presentation, or if you are representing somebody selling and they want to buy, their goal is to buy, and they find that dream house, yet their house is still on the market. So that's kind of that's the solution that Lenshore is empowering me to help you with. So let's just talk about the basics, because this is a bridge loan, and there's several bridge loan thing types out there floating around. So if you want to just share what the basics are, and then we can kind of piece together how to actually use it. So we'll talk a little bit about the numbers first, and then how they can incorporate this into their pitch. Sure.
Absolutely, yeah. So I mean, it's like you said, a bridge loan is not a new concept. There are a lot of bridge loans on the market, but I've yet to find one like ours, which has a lot of power in it. First, I kind of like to gear in on the departing residence, the house that is to be listed or has been on the market and is just not moving. What our bridge loan allows us to do, it's structured just like a cash out refinance would be, with the distinction that they are going to be selling that home within the next 12 months. We write the loan up to 75% of the value of the home based on the appraisal, or the lowest list price, either of those two. We're going to write up to 75% of that. We're going to pay off all liens that the client has against the home. So any first mortgage, second mortgage, whatever it is that they owe. And we establish this loan with no monthly payment for 12 months. And so this does two things for the client. First, that they don't have to make a payment on a house that they want to sell. So we're not asking them to pay anything. And the second piece is there's no impact to DTI on the purchase loan. And oftentimes the problems that borrowers are going to run into and why they need a contingent offer is either A, they don't have the assets without using the equity of the house they're leaving. B, they can't qualify for the payment of their old house and their new house at the same time. And this is geared to solve both problems.
No, I love it, and that's what I've seen with some of the bridge loans that I've tried to utilize, or I have utilized. It's you have a $4,000 payment here, and your new payment on you're going up, and your new payment's 5,000, and they make good money, but they don't, like $9,000. Not only is it difficult to qualify, that's a tough, like, you're telling somebody, hey, you're paid. They're literally having to pay that money. Not It's
Exactly.
just about the qualification, it's about paying. So if they're selling a house, it's listed at, I'm going to use round, not easy numbers, $1 million. 75% of that's 750.
Yep.
Right? And let's say they owe 500,000. They're getting 250,000 as a down payment, right?
Yep. Exactly.
So, and I have a question. What if they don't owe anything? So if they
Yeah.
have $1 million house, and let's say there's somebody who's maybe downsizing. Kids are out of the house. They're going from, hey, we don't want to clean this big house anymore. It's just too much. It's too much. We want
Right.
to downsize. Are they able to maybe use that 750 to pay cash?
They are. Yes. So and if they were downsizing for a home for less than 750, like we can do less than 75% and get them the cash that they need to go and buy that house pretty simply in cash with no loan and no strings. So
And I think that's a big differentiator too, because most bridge loans, you have to do another mortgage, right? So
yeah,
I've heard, I haven't done any, where there's a scenario where somebody owns a house outright, they do a bridge loan, but then they're forced to do $150,000 loan. And then
and keep it.
and then once it sells, they're paying it off, and it's so that, all right, that clarifies some things for me. I think that's a powerful, um, it's a powerful thing. You had mentioned contingency, and I think most listing agents and or buyers agents are familiar with the word contingency. But can you just, so
Yeah.
so the new offer, let's say they are getting a mortgage, they're doing a bridge loan, using that to as their down payment, they're able to do the offered non-contingent. So that, what does that mean?
Yeah, so essentially they don't have to sell their departing residence prior to purchasing the new residence. As simple as that. So there's no the offer doesn't come in to the seller saying, "Hey, yes, I want to buy your house and I will, and I'll pay you this. However, I first have to sell my house to get the money to pay you that." And this bridge loan is geared toward taking that contingent offer out of the equation altogether and allowing conceptually any borrower with equity to go make a non-contingent offer on the property that they want and buy before they sell.
So not only helping them tap into the equity, but in my experience, I've done one or two mortgages, right? It's when you're the strength of the offer, when I'm having that conversation with the listing agent, when I'm working with a buyer, it's talking about the strength of the offer, how quickly, how the loan approval period, when we can close. Yes, check. We've done DU. We verified everything. This keeps it really easy to verify the assets.
Yep,
Um, but in my experience, if there's a contingency, I mean, there's possibility and probability. I think it's a 10x probability, amplifies the probability that that offer will be accepted exponentially.
absolutely.
That's how I look at it. I think you kind of touched on what's a good client for, like, who's a good client that this is best suited for?
Yeah, so I think there's two people that I get a lot of bridge loans on, and two, I guess, client basis that I'll generalize a little bit. The first is going to be the client with a lot of equity, who's wanting to tap into that. Obviously, if we have a borrower to use the round numbers earlier, if we've got a client who owns a $1 million home and they owe 800,000, $200,000 is a great amount of equity, but I can't tap into that. So we're looking for clients who have a good amount of equity and they want to leverage that wealth that's stored in their property. And they've planned it. They're looking to purchase either a dream home or get into a new home. And I'd say that the second, I guess, most popular bridge loan or biggest client base that I would say we serve is for borrowers who either want to avoid the pains of contingency with, hey, I'm selling my house and maybe that's likely a contingent offer as well.
Mhm.
And so maybe that financing goes through, maybe it doesn't. I want to avoid that. Or in the same vein, borrowers who have accepted a contingent offer and have made a contingent offer, there's a string of contingency. For whatever reason, the offer that was made on their home that they're leaving fell through. Financing didn't work, whatever it is. Well, now my contingent offer is no good either. How do I save that? Enter bridge loan.
Low appraisal, something happened with the inspection. I don't say appraisal didn't was in alignment. I get it. Inspection, something they didn't like about the insurance came. That's what we deal with a lot in Florida.
Yeah,
Homeowners insurance comes in higher than expected. They don't like and it's in the inspection period. They don't like that new payment because it went from thinking it was 4,000 a year to 10,000 a year in homeowners insurance. One of the biggest questions I get from listening to just realtors in general, how fast? Like, what's the speed? Is this a 90 day, a 30 day, a 60 day?
Great question. So my target, Eric, is always 30 days or less. A bridge loan presents a unique transaction process because it's a cash out refinance on another occupied property. So in the lending world, we know that that invokes rescission, which means at the end of any bridge loan transaction, not only do I have a CD waiting period where we send a closing disclosure to the borrower and we wait 3 days before they can sign, but then on the bridge loan piece, for another 3 days after they've signed, we cannot fund the loan. We give them rescission should they want to pull back out of that. They have a right to cancel. And so on any bridge loan transaction cycle, we have 7 business days at the end of the cycle that we can't do anything about. We can't make things go when it's not ready. So with that being said, in terms of the heavy lifting, the way we gear that is I ask for a lot of documentation up front to verify income, to verify assets, to get a fully vetted pre-approval underwrite. It takes a bit of time, but then results in a faster process. So that for the next, for the first 21 days of the file, we're doing the heavy lifting. So that on day 21, a CD's out, and we've now built in that buffer for our waiting periods that we can't get around.
Okay. So let's say I am a listing agent and I'm working with somebody who wants to sell their home, and it's a unique property, and or they want to sell it for a price that's a little bit higher than what I see on my CMA. The market's saying it's 900,000 and you're trying to get to 1 million, or what, like 950. So they're trying to go a little bit high. And I know it may sit as a listing agent. All right, I'm working with somebody who won't accept that this is what their bottom line is. It's most likely gonna sit on the market, and different markets in Florida. It could be different for condos and townhouses, and like properties are sitting for different amounts of time.
Yeah.
As a listing agent, when would I ask my seller to start this process? Would this be something I would do, hey, let's list the house for 2 weeks and then see what we get for attraction? Or do you think it's something that should be done? Hey, let's do this right away. Let's get it locked in place. So if you do find that house that your dream house before this sells, and we understand you're trying to sell it a little bit above market, when do you think they should start? How would you advise a listing agent to approach that?
Oh, that's a great question. Um, I'm a planner inherently, and so for me as a client, having my home on the market and actually making offers, but before having like kind of a plan underneath that stresses me out a little bit. That's me personally, and I think that's kind of the key answer to your question is that every client and every home is going to be different, right? So I don't have a one size fits all. Hey, you should always approach it first. You should always approach it after. But what I would say that I think is specifically relevant here, based on what we've seen. But first and foremost, this is a unique product in that the home can be listed while we're pre-approving the loan. So I'm not going to make the seller wait, or the listing agent wait until we're done with our pre-approval and have funded the bridge loan to list the home. I want it. Ideally, it's already been listed. If it hasn't been listed, I actually need it listed prior to funding. So that's one big piece. The second caveat here for those unique properties or maybe properties that are dilapidated and need a little bit of love or rehab.
Yep.
What's cool about the bridge loan is it's a cash out refinance. So that cash belongs to the seller. It's not required to be a down payment to go toward the new home. And so we've seen clients, I think most recently I had one where they didn't want to list their home because they had a lot of stuff. It was very cluttered. The listing agent didn't think they were going to get any traction if they put it on the market. And so we made an exception. We let them list within 30 days post funding.
Okay.
And we gave them the cash to pay a painter to repaint the property, to pay movers to help them move all of the clutter and all of the stuff that was on the property, so that when it first went onto the market, it was in an advantageous position to get as much, the maximum offer possible, rather than having a property that is dilapidated and has to be on the market and it's not going to get that offer because it's just not ready yet, but there's potential there. So I think what I appreciate about our approach to this is it's not a one size fits all box that I have to hammer someone into. It's multifaceted, and we can kind of meet your clients in the middle within reason.
That's I'm thinking as if I was a listing agent or if I was selling my house. What you just told me is I'm going to be able to, all right, I know it's if I do X, Y, and Z, I'm going to be able to sell it for more, or maybe like you said, if it needs it's dilapidated, it needs a kitchen made, whatever it needs. Now I'll be able to sell that house at a premium.
Yep.
In addition, if I'm making an offer, I'm not in a rush to sell that house, because anytime we're in a rush for anything, you may get a one or two low ball offers,
Yeah.
low ball offers, and you have to accept that in order to get the new one. So this is, wow. That's the renovation, the repair, that was an aspect I didn't even click with, but it aligns with me. All right, well, I have a list of questions over here. We talked about, so again, now I'm a listing agent. What type of materials do I have that I can actually, when I'm going to a listing presentation, or potentially I have a seller their house is on the market. Is there materials that I can go to and say, hey, here's a flyer on that. Here's some data on this.
Yeah, absolutely. So it's a program that's publicly available on our website, lenture.com, in loan programs. So I mean, that's the first thing I'd say. But on top of that, we want to be a great partner, obviously, for our loan officers, and in turn for your agents. We offer free white label marketing materials, meaning that you can add your logo, your contact information, your stuff to a myriad of flyers that goes over what a bridge loan is, when it would be applicable, rough terms of the bridge loan, and the like. So it lays it all out, and it's free. I don't charge you guys anything for it. It's there for the taking. So
Great. Wow, I think we covered a lot of stuff. We talked about education. We talked about speed, simplicity in this. How we're collecting the same documents as we would for the mortgage anyway. So it's not like we would be saying, hey, I need your W-2s twice. We need your pay stubs twice, or right. It would
right, correct. Yeah. So we bring in, it's typical. So it's going to be the same underwriter that's assigned to it. I'm obviously the same account executive that's assigned to it, and kind of babying it through the process. We're going to use the exact same set of income documents, asset documents, and the like. And typically, I mean, they're two separate, distinct loans, a bridge and a purchase, or if they're downsizing, just a bridge. Those conditional loan approvals and the conditions we need are going to be synonymous. So the last one I did, it came out with 8 conditions, and it was a copy and pasted conditional loan approval. It was 8 conditions for 2 loans. And so underwritten at the same time.
Gotcha. I do have a technical question. And I'm confident you'll have the answer. Let's say somebody owns the home free and clear,
Yeah.
and they do not have homeowners insurance on it. For some reason, there's some crazy scenarios. They would need to have the
Great
homeowners.
question. Yeah. Yep. So we would need to have homeowners insurance, and it would need to be effective as of the time of our closing. We'd need an insured home.
Gotcha. Yeah, and I would always do a cost benefit analysis on that. Listen, your insurance is going to be 4,500 or 5, whatever the number is. But you're able to do, like you said, do if you paint the house, it's a peace of mind of a higher value down the road. That was just one off.
Right. Well, and I think that merits conversation, though, because there is a piece that we haven't discussed, and that is the taxes and insurance, the escrows aspect of a bridge loan. And that is that with the bridge piece specifically, we do impound 12 months of escrows for that property. So where you mentioned, hey, there's a cost analysis here, but my follow-up question, and I guess to accentuate that, is, hey, how long is this property realistically on the market? If it's on the market for a month and then it's sold, you have paid 1 month of homeowners insurance, and we will refund you 11 to get that money back, conceptually.
Gotcha. And similar with taxes, you're responsible for the taxes while you own the property.
Mhm.
What would be the downside?
So I think the biggest thing that I hear very transparently is cost. Cost can be scary with a bridge loan, and I will be the first to tell you it's not the perfect loan for every client.
Mhm.
The baseline that I would set in terms of origination percentage, between all of the cost structure on it, it's about 2.75 points at origination. The borrower's paying for an appraisal, both on the bridge property and on the purchase property, so you're paying for two appraisals.
Mhm.
They have title costs and refinance costs associated with it. So I'd say the biggest pushback I hear on bridge loans is, hey, this is expensive. And conceptually, I agree with you. It's not a cheap loan, and I wouldn't be the one to tell you that it is. But for the right client, weighing the cost of contingency versus the cost of a bridge loan can be a phenomenal benefit. My regional manager, 4 or 5 years ago, we had a housing boom in Utah, where I'm located. He had a condo and was purchasing a new build, and he had a contingency deadline that he had to be under contract on his condo within 3 days. He got a lowball offer, 30K under what they assumed the value was. And he took it because he had to meet contingency. And 3 days after that contingency deadline, so the next week, he got an all cash offer for 40K above asking. And he's under contract to sell his home. That $70,000 swing would pay for two bridge loans easily. But
Exactly.
we look at it from the perspective of, oh, almost 3% of the loan. That's a lot of money, and it is. I and I don't relish in that. It's not cheap, but it can be right for the right client. So
Right. And we look at cost, we look at convenience, and we also want to talk about people's goals too. And there's a lot of people that will not qualify for both. So to have to tell somebody, I really dislike the word no, but to say no, no, Tyson, I know your wife loves this house. She's been talking to you about this house that you want to purchase, but until you sell yours, you can't do it. So there's the convenience.
yeah,
Convenience
what I
for
think I think to that point, sorry, Eric, I'm a storyteller. But we closed a loan for a family last Thursday. What was the date that it closed? These guys have been trying to relocate across state lines for about 3 years. And it's a scary move. It's a big commitment. We're licensed in all 50. So it wasn't a big deal for us when it finally got to us. But for them, it was a big deal to make that jump. Um, they'd had their home in their departing residence listed for 6 months. And they were reaching on the asking price. It was certainly overpriced. They were reaching a bit, and they just had no traction on it whatsoever. They had jobs in a new state. They needed to move to a new state. They found their dream house in the new state. And so they approached us about a bridge loan. That was kind of the caveat or the catalyst, sorry, to get them there. Um, when we did it, the way I structured it, it came in at 49.98% DTI on the purchase. So we absolutely towed the line in terms of what we can finance for them. Literally would not have been possible with the payment that they had on their departing. So excluding that made a massive difference. But I think the key here is, were there costs on that loan? Yes. The costs that came out of the borrower's pocket equated to $200 is all they paid at closing, because we leveraged their equity to pay every other fee, every bit of their down payment. So they bought an $800,000 home for $200 out of their pocket. And then the payment, obviously, but it was
out of
huge.
out of their pocket. Another thing that I do. You know Barry Habib, right?
Yeah.
MBS Highway, and we rescheduled. So we had so I'm a member of MBS Highway, a subscriber to MBS Highway, and one of the cool tools that I utilize is the cost of waiting, and it shows projected appreciation over time. So with that said, when we factor in, yes, there's a cost to this loan, but what is the cost of waiting till 3 months, 6 months to buy? So let's say it's 6 months down the road, the house you're buying has appreciated. So now there's like a higher cost too. So what is the total net cost? So we can really geek. I know you like to geek out on numbers. I do too. Some of it is some future forecasting. But when we have all these tools surrounded by the ability to do this, I think it makes sense. Again, not for everybody, not for everybody, but for the right seller, buyer, somebody who's selling it. But this is great. So, do you have anything else? I think we've covered.
Yeah.
Is there anything I'm missing?
I can't think of anything that we haven't discussed. But I'm always available. I'm available for you, for your agents. So please, call them with me or call me with them. I'm here to explain and help conceptualize and answer questions on a scenario by scenario basis. So use me.
Awesome. Well, Tyson, I appreciate your time today, and I look forward to not only doing bridge loans. You do a lot of you guys do a lot of other loans. This isn't all you do, uh,
Right.
so I look forward to doing some more business with you.
Agreed. Thank you, sir.